consensus among analysts is that the Reserve Bank will once again raise interest rates as initially forecast when it began this hiking cycle in November. The expectation this time around is that the repo rate will be increased by at least another 25 basis points. Our business reporter Tumisang Ndlovuis is tracking that story. She joins us now live from Pretoria. So Tumisang, just from what I've read this morning, analysts saying that it will be 25 or 50 basis points, but most certainly most of them saying there will be a hike today.
Indeed, a 25 basis point hike has been factored in by analysts, but the proof will be as soon as we get delivery from the Reserve Bank Governor later today. What the analysts are basing this on really is the worsened effect on the global inflation as well as rising prices in terms of oil in particular, and that's related to the geopolitical matter that pertains to the conflict between Russia and Ukraine. But we also saw in South Africa's consumer price inflation figures that came in at 5.7% yesterday, unchanged for the month of February since the month of January. But what is a worrying factor there is the continued increase in food prices, particularly staples. With an interest rate hike of 25 basis points, we would then move to the repo rate in South Africa being at 4.25%. For the ordinary consumer, that is a significant increase, especially after 2 years of that break where we saw interest rates at record lows at 3.5% as a mitigator to the economic impact of the global COVID-19 pandemic. Rising food, rising fuel, as well as rising electricity prices, and now the prospects of even higher interest rates is going to be quite a difficulty for most consumers.
A lot of pressure on consumers this morning, Tumisang. I mean, effectively, what does it mean when the repo rate goes up? It's more expensive for me in what sectors of my life?
It is definitely more, expensive for you if you are servicing a mortgage or having a car repayment. Of course, when the repo rate goes up, if it is that 25 basis point again this time around, the lending rate, which is what the banks use to mitigate or rather to as a measure for their rate of debt between consumers and themselves, and that rate also goes up by 25 basis points if predictions this time around are correct. So if you are paying even higher for your mortgage and your car, that is doubled up on what you're already paying in terms of increases in your household goods.
Yeah, absolutely. You're paying a lot more to borrow from the bank, essentially. Tumisang Ndlovuis, thank you so much for that update. She's live just there from Sandton ahead of that decision that's going to be announced by the Reserve Bank a little later on today.